Edward Stevenson, TimelessWolf.net, and the following is basic technical analysis on NeoMedia Technologies Incorporated, listed on the bulletin board under the symbol NEOM. Following a 52-week high, just above 5 cents per share, this stock has been on a downtrend, and following so in mid-September, we saw a very classical rebound, or reversal in trend. So this being the downtrend, and now this being the uptrend that is formed. Let me explain. This dashed line in green represents a supporting trend line, the one in red a resisting trend line. Collectively, these two trend lines represent an uptrend. That is, until the price either breaks below this green line, meaning it closes below it, or breaks above this red one, meaning the price closes above the red trend line. This will remain an uptrend, and the price will continue to trade within these ranges. Now, in terms of support and resistance, I'm looking at some key levels for support at the 10-day simple moving average, so hereabouts, and somewhere in and around here. So this lower line would be the 10-day simple moving average. I circled it here, so let me indicate these lines in green. And this other line is the low on this trading session, and also resistance dating back to this range right here. So mark that was broken back in late July. However, the price was not sustained and broke below it once again. So these are two key supporting levels after price did break past it a few trading sessions back here. So in between 0157 and 0163, anywhere between those two marks is our supporting zone. Resistance going forward, we're looking at the high end of the day, so 19.7, anywhere between there and the top Bollinger Band. And likewise, the high on a few trading sessions back, let's assume that was 23 or so, so 023, 0235. I'm not sure exactly where that was, but that would indicate resistance. And finally, the key mark, which is 0258, where parabolic SAR currently resides. That's these little dots right here, if you can see them. So that would be resistance going forward. And again, assuming that this resistance trend line on this uptrend is not broken, the stock continues to trade within this range. Notice the volume a few trading sessions back when it bumped its head at that resisting trend line, well above average, so that's ideally what you'd like to see. Little retracement here, and likewise the volume retraces, so that's a good sign. That means the sellers aren't really overwhelming the market, but there's a natural decline, just like we saw back here in late September. Rallied from probably what was 003 to, if I'm reading that correctly, 0142, and then was supported by the supporting trend line, only to head back up. The indicators here, so showing a lot of strength. I mean, the market rallied. We saw that the market was overextended, needed to pull back. It done so. However, coming off Friday's trading session, I again showed some strength, which was very nice to see. Either you have strong longs in there, or traders have been watching this and see that, you know, the supporting trend line will hold here, and the market will continue pushing north. So you can see here, full stochastic still well above 50. Likewise, relative strength index, so holding really well above this mark, which is bullish to see. Money flow index, so definitely volume coming in. If I just scroll up here, you can see the volume has been very significant ever since that rebound, and likewise money flow index shows the type of volume coming in. And here you have accumulation distribution, and everything just looks positive at this point in time. Nothing very bearish about the chart, just very natural price movements, working in cycles. Again, bouncing off support, resistance, support, resistance. So this is a trading range that I imagine swing traders are looking at, and in the event that this resisting trend line is broken, it will give off a very bullish trading signal. Once again, this was Edward Stevenson from timelesswealth.net. I would encourage you to visit my site and sign up for my free newsletter for overlooked trading and undervalued investment opportunities. And also, thank you for listening.